Organization for Finance, Chapter 6. Organization for Finance. Inasmuch as the primary purpose of a business enterprise is to make profits, the handling of the firm's finances is, therefore, extremely important. Money is needed to start the business. It is needed when the business is in operation. And it is needed when the business is expanding. Capable handling of finance provides money for these three purposes as it is needed. The financial function. The financial function is essentially concerned with the management of monetary affairs, with the raising and expending of money. The Chief Financial Officer may be called Vice President for Finance, Treasurer, Comptroller, depending on the practice of the corporation. This chief officer handles cash, bank, relations, credit, and quite often the accounting function. The capital pool, savings and investment. Savings are generated directly and indirectly by individuals' business enterprises, a variety of institutions, governments, and others. Financing the non-corporate enterprise. In the case of the single proprietorship and partnership, the initial capital comes from the individuals directly interested and possibly through the loans and investments that friends are willing to make in the business. If the capital for major operation or expansion is, however, to be borrowed, the usual way is by bond issue. Bond issues are company promises to repay the loan and are backed by a mortgage on the part or all of the company's property. The mortgage takes the form of a trust agreement which contains all the rights and obligations between the company borrower and the lender bondholders. While a stockholder is an owner, a bondholder is a creditor. Bonds are differentiated from other loans of a corporation in that they partake of the nature of mass borrowing. A wider group of persons become creditors of the corporation. Financing day-to-day operations. Once a business is started, the money requirements of the company are continuous for goods, wages, and other expenditures of a going concern. The sales department tries to sell all the goods it can, and purchasing department tries to buy what is needed when it is needed. Cash position. There should be enough money available to pay every obligation when it is due. Such money, except for initial capital and subsequent expansion, should come from cash sales and from collection of amounts receivable. The cash position of a company is the amount of money on hand or in sight in relation to the total sum of accounting payable and notes payable coming due during the same period. A treasurer, therefore, who can keep his cash position good, have money for requirement of the business and for emergencies as well, is said to be a good money manager. Financing seasonal business. Quite a number of businesses are seasonal in nature. A summer hotel, for instance, is a highly seasonal business, and unless it is located in a high area or in a tourist spot or beach resort territory. The different functions of banks have two functions. They act as a middleman between savers and investors, that is, between the supply of and demand for capital, and they supplies the principal means of payment in modern communities. Financial institutions, banks can really facilitate the savings investment process by performing one or more of the following general functions. First, gathering, disseminating, and using information. Second, purchasing, holding, and selling securities. Third, providing diversification and insurance against the risk for savers and depositors. Fourth, increasing liquidity to those who part with money and hold other claim securities. Fifth, explain different kinds of credit. Trade credit. Normal credit forms extended to firms by their suppliers. Secured borrowing, likely to provide more money to most companies than trade credits. A secured loan involves borrowings against account receivables, inventory, machinery, equipment, vehicles, construction, buildings, or a contract of some type. Unsecured borrowing, short-term loans, line of credit, and revolving loans. Paper and notes. Short-term money is also available through two-name or three-name paper of various types. Acceptance financing, commercial paper. Captive financing. Large companies which sell products against installments, lease or rental payments may wish to consider establishing their own finance companies. Intermediate term financing depend in large measure upon predictions of the business climate, company operation, and cash flow. Leasing. One of the more popular methods of obtaining intermediate financing or long-term financing involves the use of leases. Long-term financing. Longest term of financing is with equity, which occurs when investors turn over cash in return for a part ownership in the company. Debentures. By far largest volume of long-term fund is made available to companies in the form of term loans, either secured or unsecured. Government financing can take the form of direct governmental involvement, or there can be government programs to facilitate borrowings in other ways, such as by providing government subsidized or supervised insurance programs. Off-bank refers to financing which does not appear on a balance sheet. Petty cash. Although the company usually uses checks in paying bills and most other items, it is necessary occasionally to make small payments by cash. Paying for good purchase. When the company buys goods from others, it receives a bill for invoice for the goods purchased. Maintaining bank balance. Care must be taken guarantee only that the bank account is not overdrawn, but that other requirements are also met. Estimating cash requirement, there are already known factors of expense which determine cash requirements. These requirements may be for employee payroll, for utility service, for current purchases, for non-routine expenditures. The company commitment. As commitments are made, they are entered on a commitment sheet which shows to the treasurer at all times how much money is to be paid out and when. The budget. Well-managed business are operated under a budget plan by which an estimate of expected income and expenditures of the company is drawn up in detail, showing where the money is coming from and where it will go. Purpose of budgets stated briefly. The purposes of budgets are: first, planning, a systematic and unified plan of activities for designated periods of operation. Second, control, a standard of measurement of results against which variations from previous plans become evident. Third, coordination, activities become a part of a plan for the enterprise as a whole. Democratic processes basic to the construction and operation of a budget tend to bring understanding and unification of departments and personnel. End of chapter 6.